turn my camera on. Looks like it froze. There we
I believe we are fully live here. Great to be here and with such an amazing audience. Heard great things about the folks of you who are out there and with some amazing other people here on stage. My name is Joel Dietz. I was sort of one of the first Ethereum people. I guess you could say I joined on day one and did some early smart contract things. And then over time have gotten involved into the more hard research space, currently working on kind of metaverse languages and mapping within the metaverse, including a larger thing of how that impacts society. How does cryptocurrencies and alternative assets impact society through my status as a fellow at MIT? And I'm very excited to be talking about some of these issues here today. Zachary, you want to go next?
Sure. Hello, everyone. My name is Zachary Friedman. I'm the co-founder and chief operating officer across the GDA group of companies. My background started primarily in tech, where I had sold several businesses before coming into the digital asset space in 2015. Largely got my start with Secure Digital Markets, which has grown to be Canada's largest digital asset brokerage. Across the portfolio, we are really focused on advisory, marketing, trading, lending, and especially now Web3 and investments across the Web3 portfolio. And really GDA is focused on being an investment bank for the digital world.
Great. Anthony?
Yeah, hey, how are you? I have an alternative investment group which has a focus on structured investing instruments. I'd say primarily historically that's been on the public equity side. And in the last, call it year or so, we've started now looking into and more recently started deploying into the crypto space. Over the last 15 years, my partner and I have committed about 10 billion US across about 280 transactions in about 40 countries. So we've been very active, very focused on growth businesses in the middle market. So call it valuations of 100 million to 2 billion. Those are the size businesses that we're typically investing in. And really our focus has been funding really growth in these businesses that are at this kind of curve of the hockey stick, where companies are really trying to understand how to build momentum around the exponential growth that they have a clear line of sight on, but they're not necessarily sure if that's 3 months, 6 months, or 18 months away. And so we get involved in really helping fund that growth through a variety of different ways and structures. And we've been working more closely with actually GDA and Michael about looking at really overlaying what we've been doing over the last 15 years of the capital markets now into the crypto space. And then broadly, I think we've always been active in the alternative investment space through other types of instruments that we're active in, synthetic products, highly structured equity, quasi-equity. So kind of going outside of just the specific crypto space, but kind of broader into the alternative space. So definitely happy to be here and share the virtual stage with you all.
Ali?
Yeah, thanks, Joel. Happy to be here. My name is Ali Madovji. I'm the managing partner at Blockchain Founders Fund, which invests in and venture builds top-tier startups. We now have over 60 portfolio companies around the world across 6 continents. And then I also serve as senior blockchain fellow at INSEAD and on the board of 2 public companies. One is CryptoStar, which is a Toronto Stock Exchange venture company, and the other is Mechanical Technologies, which is a NASDAQ listed company, and both are Bitcoin and Ethereum miners.
So let me start with a sort of broad question, and Anthony, you already sort of touched on this, so maybe you can go first, but what has been your pathway from, investing in other asset classes to coming over to kind of the digital asset side, and what have you seen as sort of the good things about it, and maybe any word of caution if you have that as well?
Sure. Yeah, I'm happy to go first. So yeah, absolutely. And I probably good to talk about it as someone who's kind of in the early part of the emerging into from, call it more traditional world to what I'd call the digital world. But where I'd say the common denominator for us is really in businesses that are in growth mode, and the requirements of capital for those types of businesses. And when I say the requirements of capital, it's not just a function of, hey, I need X amount of cash. It's I need investment, or I need liquidity. I need it in a certain way within a certain period of time, priced in a certain manner that's sensitive to dilution, that's sensitive to kind of market volatility. And I need a certain type of investor base who really understands this. And so where we've come in and really put that lens on is having done business all over the world, and not just buying Facebook stock, or investing in the US or the LSE, but really looking at, venture exchanges around the world, from anywhere from Poland to Colombia to Indonesia, all these kind of more smaller markets with smaller exchanges where regulatory movements are taking place and whatnot. We've come to really have an appetite to understand what it takes for growing businesses in what I call growing markets to really scale and grow. And so that's really where I feel like we've seen very similar paths to where the needs of companies in the digital space in that growth mode have very similar characteristics. And so for us, it's I guess a little bit of the art of looking at what best practices can we bring into the space from what we've been doing and how active we've been in. I would say transparency is important. Good dialoguing with managers is very important. Really understanding the growth horizon of these companies, because I think, it's the fatal flaw would be, okay, there's a gold rush going on, so I just want to dump a bunch of cash into, pick this one horse or pick these few horses. I think it's really aligning and saying, hey, I want to make sure that capital's available, liquidity's available, but let's talk about how to put that to work in a manner that really supports growth for not just the business, but also the community. So that's just some thoughts about what I've seen in our early days, if you will, in the space.
Anyone else want to comment on their sort of journey into digital assets and sort of what prompted it?
Yeah, I would say, kind of coming from the other side, having spent only a short period of my career, as I was quite young at the time, in the tech space. When I had immersed and kind of discovered digital assets, I was very quickly convinced that, this was the industry that I wanted to participate in and shape my future around. I realized that, back in 2014, 2015, when I'd first discovered it, there was a lot of missing infrastructure. And part of that has led me towards really trying to shape our business and our strategies around bridging the gap between traditional asset classes and digital asset capital markets. So the span of products and services that GDA has built over the last few years under our umbrella have really been focused on trying to take those traditional capital markets investors and incumbents and guide them into the space through SPACs, through funds, through digestible fixed income products, through our trading and brokerage services. And I realized that opportunity was abundant at the time, and is really what we've been focused on since.
Ali, you have anything to say on this topic? Or?
Yeah, we've been investing in this space for a long time, right? So as I mentioned, we've got 60 companies now across the space. We break down across several different areas, but at the end of the day, for us, it's about backing just incredible founders that we think are working to change the world and build and bring innovation into different parts of this space. And so we did a lot of traditional early stage investing before this, but we really doubled down on this space when we saw and start to realize how transformational this technology is. And so we've got now companies that are, trailblazing from everything from, gaming to derivatives, NFTs, but also things like white label credit cards and even like music tech and all sorts of other things. So, it's been an exciting journey for sure. And just happy to support incredible founders as part of, helping them to realize their visions.
Yeah, I think it's a fascinating topic, and going back to something you were saying, Anthony, and I don't know if anyone else has thought about this, but I've been in some conversations, even just about, in the last week about how DAOs and other types of decentralized asset kind of things could actually be used to provide growth capital to traditional companies, SaaS models or different kind of, different like growth marketing, company sales models that basically need a little bit of capital. I think there was something called Lighter Capital up in Seattle that was doing this for kind of SaaS companies that needed particular type of growth, and they did it through a kind of debt financing to allow them to kind of scale up their sort of SaaS sales teams on top of an existing working product. And I'm curious if anyone has sort of seen, obviously we're talking about the native sort of equity tokens of people in the digital asset space already, but this even going outside of that into kind of some of the more classic, business models around tech. So, or if anyone's thought about that. Zachary, what have you seen as the sort of differences since when you like entered the space to kind of where it is today, as far as the kind of opportunity and things like that goes?
I think that the institutionalization of the space is apparent. You don't have to look very far or wide to see the major adoption that's occurring at every single level. The payments companies, the payments processors, major institutions and banks, they're really starting to come into the space. I think that, the question that when I first entered the space, I was talking to investors looking to allocate, considering this as an alternative asset or looking at a venture investment. The question was why Bitcoin or why digital assets? I think that narrative has definitely evolved to be which digital asset, which method do I use, which subset do I enter into, what structure do I use? And that's how we've pivoted the model, right? I think that the natural evolution of our business was that we first wanted to create the on and off ramps into the space, allow investors to purchase the underlying asset through the brokerage subsidiary. But the evolution of GDA Capital has evolved to be more strategic, like tailored strategies that fit these different subsets. Because the original, a couple years ago, when family offices or investment managers were looking at the space, they were looking at a total allocation of 1% to 3% on the on average. Today, that's shifting from their venture bucket or their fixed income bucket is being expanded into the native digital asset industry. So fixed income is including more DeFi, staking, and yield products. Their venture bucket is being expanded to digital asset venture as a whole. And I just think it's really permeating, where it's not being as isolated, but is just being looked at as a mainstay technology and a necessity to get involved.
And I'd jump in, Joel, to your question or your comment around kind of businesses in the digital asset space effectively integrating with or kind of supporting what we'll call traditional business models. I think for us, we see that certainly there is a world within the digital space of how can we grow within this pie, and we can continue to disrupt by leveraging off of and scaling within a digital ecosystem. I think what's interesting to us is to look at businesses that are doing that, but that are also then figuring out ways that they can enhance and amplify what is like traditional business models or SaaS business models through the disruption, versus just saying, we want to live in this separate ecosystem and we are going to grow this as an entirely new asset class and an entirely new system. I think there's a lot of opportunity for that. But if you look at the size of this digital market, or even where it will be relative to, what is been around for hundreds of years traditional business market, or the technology of the last 50 years, and the adoption of SaaS and whatnot, I think that, companies that can do a really good job of utilizing kind of digital assets to create disruption and solve for problems or opportunity, but can do so in a manner that can then integrate into traditional businesses at the same time, to me, that really shows kind of a much larger addressable market, and I also think that they're less sensitive or volatile to sentiment around what people may view, ups or downs in terms of a digital ecosystem, because they're more integrated, they're more diverse in kind of how they're looking to eventually source revenue and scale their business. And so for us, that's really interesting and compelling. And I've been talking to different networks that are looking to solve that, and others that aren't, that I still think are really interesting, value propositions. But the ones that I think have a very clear line of sight on how they can integrate in that way, I think are more attractive for us.
Awesome, Joel. I'd love to point the question back to you. Obviously, having been around in the ecosystem, I really think you've seen tremendous evolution from when you first joined. I'd love to hear your perspective on what you think the fundamental differences are. What has been the major trends of this past year as well, and where you think we're headed.
Yeah, I mean, it's interesting, seeing the business models evolve even inside the blockchain space, because, I was there at sort of the Harvard MIT conference that basically established the utility token kind of legal model. In fact, I organized it basically. So kind of seeing the ground floor. And then once there was kind of a legal precedent, it was still a bit fuzzy at that time. Then the kind of business models that evolve around trying to create some kind of native value for a token. And often how they kind of diverge at times from what you would say are like standard business models and growth models around kind of cash businesses and various forms of growth. So I would say that the market moves so fast, and it moves, internationally, and it moves partially around the collision or near collision with kind of existing kind of legal systems and regulators, that it's a very difficult thing to make kind of general statements about. Even speaking within the metaverse stuff, which I'm very heavily involved in at the moment, and GameFi and some of the things I've already been mentioned. I mean, the type of models that are happening, like in my metaverse language, I just was working on, leasing protocols for in-game assets, so that new people can effectively use them and then do rev shares on the basis of them to, play more advanced games inside of this sort of game universes. So it's very exciting. I mean, and it's definitely the future. I think it's sort of like, has a potential, but a kind of exciting potential to be a little disconnected from the rest of the world, as far as like Anthony was saying, there's a large area of traditional business models where people are off kind of in their own corner, but the innovation that can happen in a purely crypto native environment, can be so fast relative to what can happen in other environments, and do a lot of experimental models, that it's still by far my sort of favorite area to be. And I think if you're looking for very high yield but willing to take a considerable amount of risk, then it's definitely the place to be as well. But it's definitely like you're trying whole new models from scratch that never existed before. And even within the sort of tokenomic stuff of, say, 2017, not only are most of those, projects gone, but most of the, tokenomics and economic models effectively didn't work. They were interesting concepts, but they didn't have a lot of longevity. So there's a few models that have stuck around, but, a lot that don't really stick around as well.
Definitely. And I think that, these new protocols are being developed. The tokenomics models are rapidly increasing. And there is quite a bit of opportunity when you look at these new emerging models. Something I kind of share across the office regularly is that when we're faced with difficult problems, I have everyone realize that it's not just that this is the first time that some of my partners and employees are dealing with problems. It's the first time in history. And a lot of these, from a theoretic perspective or from a distribution perspective, from what we're trying to build in GameFi, even as a great example, has never really been done before. And it's exciting to be pushing innovation, investing into this sector. I think we've done 7 of our last 10 or 11 investments have been into the GameFi ecosystem, which is great, and we're really getting integrated.
I mean, one of the things you mentioned before, Zachary, was infrastructure, and I think it's easy to see how, for instance, in the 2013 era, when I entered to 2015 to 2018, whatever, the, big gaps in infrastructure that existed, even as you mentioned, doing DAOs that can do financing, but the DAOs didn't work. The first iteration barely worked, and the second iteration, now 3 or 4 iterations deep, we actually have some interesting stuff going on there. And similarly, as like Evan Lutro was mentioning in the last panel, you still can't even be sure when you sign a SAF that you're going to get the tokens back. So there's some little gaps, sometimes in there too, and it was way worse a couple years ago, but where you're still don't have that kind of guarantees that maybe people are used to wishing that they had in the traditional finance world. So it's something to be aware of. But I mean, I think that's one of the reasons why GDA and groups like it are doing such a valuable thing for the industry in building these kind of bridges between traditional capital markets and this kind of new world. And a lot of it comes into the infrastructure that people don't always see, but then provides this kind of glue that allows things to come together.
Thank you. And I think to that point, it used to be a lot easier to model our business and our new pursuits after traditional models. When we first started the brokerage, it's fairly easy to replicate what existed within an FX brokerage ecosystem and drawing from these traditional models. Today, with these new subsets, as you mentioned, there's the highest risk, but the highest return. When you look at play to earn, the way to get involved in these IDOs, which seem to have the highest return today, become they're novel and new. There's risk for you're dealing with new infrastructure providers at every toss and turn and every new vertical pivot. The ways to get involved are complex. So by the time you build the infrastructure, things already changed. So it's about staying on your toes and really trying to support through the structures and vehicles.
Something that I thought in my mind to throw out to the panel is, because it's frankly something we're starting to evaluate now more deeply, is what does that right portfolio mix look like across kind of the various digital assets? I mean, you have NFTs, you have metaverse real estate, you have tokens, you have equity. And someone like Ali, I'd love to hear, because you've been in the space. We're really evaluating now. And in my traditional world, it's, you do want a bit of diversification. And I think in the volatility and the fact, kind of to Joel's point, that what is today in many cases for a lot of these businesses will not exist. So you are very much in a venture state in terms of how you're looking at some of these opportunities. Very smart people, but they're really looking for adoption in a way where there's a lot of noise. And so if adoption doesn't happen, unfortunately, you may have some great innovation or great tech, but it doesn't necessarily get the traction it needs to really stand out in a very noisy space. So you have a lot of volatility, a lot of high risk, which typically diversify in any traditional way by going deep and having a niche where you have, or I should say not a niche, but a knowledge expertise. But at the same time, you want a certain sense of diversity in your portfolio, and so we're evaluating now. And I think with that also is, okay, how much liquidity do I need in these different investments I'm making in this space? I think that anybody who's trying to just see this as a completely liquid play is probably thinking a little too short-sighted, because there's going to be a lot of volatility. But you definitely want more coals in the fire, I think, and so we're evaluating this. I don't think, sadly, I have the best insight to here's the great mix, but maybe not to put you on the spot, Ali, but given that you have a handful, a good 60 plus you said in the portfolio or whatnot, how do you think about, in this kind of evolving market with a lot of risk and a lot of volatility? Yes, you want to back smart managers, but I'm curious how you're thinking about, do you just stick within the wheelhouse of, okay, I just want to hold a basket of tokens? Is it, I'm open to NFTs as a portion of what I hold, and metaverse real estate as an emerging portion? Like, as new opportunities come up, how do you kind of adopt them into the portfolio, if you will, and then real time constantly shift the mix of these different assets relative to kind of a broader portfolio? I'd love to hear your thoughts on that, and anybody else's as well.
Yeah, absolutely. I think it's a really good question. We hear this sort of come up a lot in sort of internal circles among a lot of fund managers, et cetera, right? And so, I mean, the way that we look at it is we get exposure across the whole thing. But when we do, for example, like metaverse assets or in-game assets, we want it to be things that we already have exposure and like a thesis on. So we won't randomly go invest into, assets that we're not, say, already involved with on, say, like the equity or the token, if there is a token. And so if we're going to go into an investment, we want exposure across the entire asset, and all of those different sort of pieces that might be part of, that overall asset or ecosystem. We do a lot of equity deals. We do a lot of token deals. We've been, I guess, lucky or I guess wise enough to go into a lot of things that weren't originally hot that, blew up, right? So we've been early investors in, for example, Play to Earn Gaming. We're the largest external shareholder in Splinterlands, which is one of the two largest blockchain games in the world. So Axie and Splinterlands. And then even companies like Lunar Crush have sort of blown up, at what they do, and they've become one of the top tools in the world for discovering altcoins. We're one of the first investors in that. So, really looking at not necessarily for us what's always sexy, but it's what we think is solving a big problem in the industry from, what we're seeing, from what others are seeing. And we like to go early onto companies and take those, those risks around that. And, that doesn't necessarily always work, but I think oftentimes we're able to see just incredible companies that are, trailblazing a part of this industry, early, and then we can sort of get involved across any of those additional assets that come out of that, whether that's like land or Metaverse or NFTs or whatever that is.
Question from the audience. So what advice do you all have for new companies wanting to join this alternative asset space? How can a company avoid being disrupted?
So I think if you look, at like historically in the year 2000, companies were, forced to adopt an internet strategy and contemplate an internet strategy. In 2010, that was more of a digital strategy. In 2016, that was more of a social strategy. Today, I think it is the onus is on traditional businesses, traditional financial models, traditional capital markets players to consider what the future looks like, to explore blockchain strategies. How can that apply, not from just a product and new business perspective, but from an efficiency and a technology perspective? How does that integrate into their model? What are the tools available to me at my disposal? The companies that are coming in today are receiving early stage funding for, to a significant degree for developing these models, in a large ecosystem. And I think that, companies need to continue to hire, the right talent, attract individuals from the ecosystem and think different. I think that's always been the way to avoid disruption, is to see how your business model can be disrupted, as, Amazon did. Look at it internally and try and see if that strategy makes sense.
And I'd add to that look who can disrupt you and partner with them, right? I think that's another way to look at it, because they're always in this new model of business in the world. People are after finding the disruption, but what they lack in looking for disruption is most likely infrastructure, and resources, because you're disrupting with some really good sweat equity and some maybe really great ideas and maybe a little bit of dry powder. But I think what they probably lack is more of the experience around and the trials and tribulations, if you will. So I would say if I'm trying to put up barriers so I'm not disrupted, I would look who's going to be disrupting me and find opportunities to work together. I mean, honestly, I think that's where really scale and growth kind of happens, is when those types of elements, they don't work against each other, which is counterintuitive to the idea that you're saying, okay, well, I'm a disruptor, therefore I'm going against the grain. But in reality, you're solving a problem. You do that, I think, in a bubble, to where Joel was saying, where I think true disruption, true growth really happens like outside of kind of the norm, right? It happens where you can be in this bubble, in this vacuum, and you operate in this way. You're lean, you're mean, and you're given a certain level of leniency from your investors because they're really hoping for some higher yields. But I truly do believe that if there can be that kind of bridge, if you will, where disruptors can be disrupting, but other businesses looking to not get disrupted can benefit from that. I think the pie is growing so large that I don't think that people need to be worrying about so much so that I'm giving off or someone's eating off my plate, as much as we're kind of growing the pie together.
I think that's wise. What about the focus areas in 2022? And where do you see the next big area is going to be, where we're headed?
I mean, we're interested in all sorts of things. I mean, we're not only necessarily hypothesis driven, and we're always open to other areas. But some of the things that we're looking at is, utility of NFTs. I think this is going to be something that's going to continue to grow as an area. super interested still in privacy. We think there's huge opportunities in privacy, especially around, say, like decentralized internets and other sorts of aspects that we're starting to see, certain interesting things emerge. We're seeing, continued bets on metaverse and gaming. I think play to earn still at the start of, its entire thing, but there's a lot of noise. So just, you got to be careful with that one. With all of the things that are happening there. We're still strong believers in DeFi. I know it sort of cooled down a little bit, but we're still seeing tons of opportunities around DeFi as well. But yeah, lots of other exciting things that we're sort of going into right now. But those are a few.
I think that it's, sometimes easy to follow the capital trail at the latter half of an end of a year like this to forecast where a lot of the development's going to occur. So, I think play to earn is still kind of in its infancy, as Ali mentioned, as more of like a job to earn model. But the architecture and the experience around these games will continue to be, developed and enhanced. I think that's skill to earn as a natural evolution, where you'll have skill-based leagues and formations around kind of the esports of play to earn is something I'm excited about in that GameFi category. The obvious, metaverse real estate, metaverse events and land. If you look at the growth of Decentraland Somnium Sandbox from a user perspective, from a development perspective, I feel like every time I look, the experience has improved significantly. There's new fantastic brands and partners, major brands getting involved as often as possible into the NFT space, and as kind of a subset how they're positioning themselves in the metaverse. That utility is becoming more and more apparent outside of collectibles, into in real life experiences. Decentralized social is something that has been very prevalent as kind of a augmentation to that trend, and that I see a lot of early stage development to support the influencer economy, to support new social networks. So I think those are all exciting. The obvious, continual kind of growth of the DeFi sector is also there.
I echo a bit about, just as one area I've found interesting from a metaverse standpoint. I think clearly there's a big buzz, about the metaverse. We were at I was at a lunch with one of the CEOs of one of the larger metaverses. And what I think that we don't realize when we think about, okay, this land grab to get into the metaverse, or okay, the metaverse is a thing, and so everybody wants to participate, so let's just, drip our money in, is what I think that's where I think it's the tip of the iceberg is when I was sitting at this lunch or this meeting, the development and the vision and the implementation of the vision within the metaverse by the management. They're talking about building metaverses within metaverses. They're talking about, really going deeper down the rabbit hole and expanding more and bringing brands in and creating real experiences. I think that it's taking all these best practices and then all these opportunities, and really the companies that are managing, or the DAOs that are managing around the growth of the metaverse, are just getting started. So I think it's not to say where it's like, hey, this is a hot topic, it's a headline, so let's throw money into it. I think it's really start to study, I would say, in terms of where the growth is within the metaverse, as what is these next layers, these new areas of opportunity that are getting uncovered. And I imagine it's through participating in conversations like this, where you're getting a little bit more of that interesting information of what's next on the horizon, and how can I get, because everybody's always looking for kind of to get ahead of the pop, right? And I think the way to do it within the metaverse is to look into all of the growth that's expanding, because there really is more than just what you see today. I think there's more of kind of the monetization around galleries, around NFTs, and what happens when you walk into the, to the Nike store in the metaverse, and all of a sudden you're now in Nike's metaverse, and then what does that experience look like, and how is that open source? So, and how do those brands interact, and where's the new revenue opportunities and monetization that can happen for individuals in these decentralized places, but with a lot of these kind of brands and other parties getting involved, because I think there's going to be a lot of funds flow going on in these worlds, and there's a lot of new revenue streams that are going to be layering in that don't exist yet. And I think my last point is that the management around them, I think, is thinking about it and is executing around it. And there's and that for me is exciting, because versus where I've seen in the past where it's like, hey, we have something great, we stumbled on it, now we have a bunch of money, and what do we do next? I think that was the however many years ago, the first kind of a couple waves of what I used to see in kind of the digital asset space. Now you have really smart teams with capital behind them who have something really great, and now they're really continuing to reinvest and scale and grow with these types of opportunities.
And I think each niche has an entire ecosystem to be built around it. If you focus on a subset like the metaverse, you can have really everything from studios, marketing agencies, brand activation, infrastructure players, real estate developers, like we started at Metaverse Group, to buy, sell, and lease land. You have the structured products. So I think that when you look at any or like the DAO ecosystem, what does the tooling look like? How do you automate that? How do you support that infrastructure? In play to earn, it's what do the guilds look like? How is the ecosystem around marketing and brand activations put in? I think it's similar trends where if you understand where the attention is going and the capital is being directed, then you look outwards of what are the biggest needs of these subsets to grow into holistic ecosystems. Obviously, you're taking a risk, and that's where the payoff comes from on these big bets is that will this actually hit the mainstream? But keeping your head down, understanding the metrics and the data, experiencing them yourself. I think that any portfolio manager, investment manager, individual, the best way to understand what these trends are is buy your first NFT, go walk around in Decentraland, attend an event, feel what the experience looks like and try and forecast forward looking into the future. And that's always been a guiding principle for myself and helped me make some really strong decisions.
Yeah, when I'm in some ways the CEO of the largest metaverse, because this language that we started actually turns out to have a generative property to it to create metaverses from it. And when I give talks about metaverse, which I've done quite a number of recently, I think of it as sort of the bridge to the unseen world. So it's not just about all the land things, but it's actually every type of human experience, imagination that we've had in our minds, and how we convey that kind of downstream to other people. Which once you do that, really expands what's possible, because we're still always discovering that. It goes to pheromones, scientific research, imagination, future of cinema. So it kind of encompasses a lot of things. And then similar to what we were talking about in the very beginning, it's also an open area of innovation. So, it can allow some of these things to evolve at a much faster pace than if they're always trying to integrate back into the brick and mortar world and try to figure out, what the people there think about it. So I'm very, very bullish about the metaverse as well for that reason.
As am I. It's really exciting. And we're continuing to try and focus on bringing these events and experiences and development there. It's one of the largest focuses under our kind of Web3 portfolio for sure.
Super.
Awesome. I think we are out of time, but thanks everyone for attending. Thank you, Joel, for moderating and the audience here. It was a pleasure, guys, and great to chat.
Thanks, everybody.
Cheers.
Thanks so much.
Cheers. Bye.